And joining me in studio now is Mr. Roger Schlesinger. His alter ego is the Mortgage Minute Guy with Skyline Funding Corporation. Roger, good to see you again.
Thank you, Don. Nice to be here again.
Well, it's good to have you now. Of course, what we're talking about this week is a new administration coming in. President Obama, or he was sworn in twice. We call him President Obama. But how is all of the new and the change and looking forward affecting the mortgage market?
Really, nothing is affecting the mortgage market right now. It's decoupled from the Treasury market, which is the first time I've seen it in 18 years. It's on its own, and the only thing that really is affecting it is the volume. As the volume gets bigger, the lenders are raising their rates. So we went up about an eighth or a quarter this morning just because they can't handle the business. Once the pipelines get cleared out, we expect them to go as far down or even further again, which means the middle to the bottom of the fours. And then this is what we're talking about is conforming loans and conforming loans in the high-cost areas.
Now, of course, whenever anyone on financial media is talking about the mortgage market, we're talking about the credit crisis, we're talking about having better access, easier access to credit. We've had these $700 billion, now they're $825 billion bailouts. This has gone through like a linebacker going through, a pro linebacker going through a high school defense and laid all these things in their wake. All these banks are in his wake. Is it much more difficult today to get a mortgage than it was, say, 18 months ago?
Well, yes and no. First of all, the only banks that are lending are the banks that are doing conforming loans or conforming high-cost area loans, and they are selling them right to Fannie and Freddie.
Okay.
So I don't really consider them lending. I consider them, effective middlemen.
Okay.
Because they have no fear that's going to, if they approve it right, it'll be sold, and they're out of the picture. They made their money and they're gone. Is it more difficult? We don't have stated loans, and of any type, except in rare occasions where we have some lenders will come in with very high rates and very low loan to values, and we'll give you a stated loan. Like one of my clients is looking for one, and he's got a $5 million house and a little over $2 million loan. And I said, I just got a company that'll do a second at 40% loan to value.
Whoa.
He's there. He can't. It won't help him.
Yeah, okay, so what is someone who, we live in a country where there's a lot of self-employed people, a lot of entrepreneurs. What does a self-employed person do that needs financing for a home?
Boy, it's very difficult, and it's not even just self-employed people. It's people who have very complex lives. I have a client who has a house that's free and clear in the Hawaiian Islands worth $4 million. It has one house on the mainland here that's worth about $800,000, has a $400,000 mortgage on it. The person owns condos across from colleges that are free and clear that have terrific cash flow, but that's in a trust. Mm-hmm. And different vehicles in different things. And trying to put it together on a tax return, it just doesn't work. Yet the woman is probably worth $10 or $15 million, has perfect credit, is looking for just a simple lowering of her rate, and it's probably not going to happen.
It's not going to happen.
Probably not.
Because she can't show the real income to qualify for that $800,000 mortgage.
Right. And I can give you story after story after story like this, where people just can't qualify because they haven't done it that way. And the bad part about it to me is that they've changed the rules in the middle of the game. If they had said going in, you're not going to get a home loan unless you do this, well then, okay, they wouldn't have had a home loan, or they would have, done their taxes differently. They would have maybe showed some income instead of not showing all their income. But while time after time after time they were able to get a loan one way, why are we changing the rules on them?
Okay, Roger, we've got about a minute left. I do want to say, is there any hope for people out there? You're answering the phone at your office. What are you telling people?
Well, we're doing a land office business because, we also have expanded the requirements so that where we used to have a 40% loan, 40% income to debt ratio, mm-hmm. we can go up to 50, 55. So we've expanded. We're trying our best to get everybody in, and we're doing it. The worst part is the jumbos. We just have a few jumbo lenders who, if you have the patience and the pleasing personality to deal with these people, you might get a loan, but if you don't, you just go crazy. They just ask for things that they're unheard of.
Well, there's no more pleasing personality that I'm aware of than Roger Schlesinger. If you want to talk to Roger and pick his brain, Roger, how do they get a hold of you?
You can call us at 866-304-9378 or write to me at mortgageminuteguy.com. or go online and fill out an online application. Now, yesterday I answered 53 emails.
Wow.
And I have a whole stack ahead of me when I get back today, so I'll get back to you. It's just going to take a little while.
Okay, once again, Roger Schlesinger, a.k.a. the Mortgage Minute Guy with Skyline Funding Corporation. Roger, thanks again.
Thank you, Don.
Take care.